Shout out to everybody here on the live. Sorry for that extra music. It was kind of mulled over there. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you. Let's pick up where we left off. Earlier today, I told you we would go to the yellow line. You remember that? I said, but it was so crucial that we got above 30,300, right? We were battling. We got above 30,003. We didn't beat that, you know, and once we got above 30,300, bang. And I kept saying, that's your chance right there. And 90% of the time, this is my system. Once we found the divvy, I told you, make a higher low, you're going to go where? To the 200 SMA. That's where I sell 70% and leave a runner, and the runner can continue to run now. And if the market wants to continue to pump, Bitcoin will continue to move. All right? Shout out to everybody here on the live. And what I love about it is I was just live, and I showed you this exact setup, right? And I showed you this setting triangle. We could go either way. But I told you we normally pump back up to the 200 SMA once we get the space away from the 21. That's how the moving averages work. They can't get too far apart. Once the 21, this is the same reason how we short. You short the market when the 21 and the 200 get far apart. That's why we wanted Bitcoin to come down, but it didn't. And that's why if the 200 keeps coming up the price, you're likely going to get a move to the upside. We're going to talk about all this. We're going to break it down. And we're also going to show you the Fed meeting. We're waiting on Powell, baby. Powell, baby. And he'll be on in about 10 minutes for the Fed meeting. God bless each and every one of you for jumping on in. Appreciate you all for being here, sharing your most precious asset with me, and that is your time. And I just do, let's see. I just use the Federal Reserve's YouTube channel. It's the best one, I feel like. This one right here. Also, then I can't, you know, who cares about Yahoo and all that. But 7,000 people watching. Let's go, baby. 2:30 p.m. Powell will be here. We will have Bookmap up on the left side of the screen. I'll have the 1 minute to the 30-second chart, maybe even smaller, on the other side of the screen. And we'll break it down for you like we do every single day. Let's talk about a trade right now. The 1 minute about to break to the upside out of this beautiful flag. See this? That's an ascending triangle really right here. About to get busy. And I wouldn't be surprised if this began to break out right now as we speak. That's a possible scalp trade right in front of you. Stop loss beneath the previous low. Target would be 34,750. This could happen right in front of our eyes right now, as we know Jerome Powell is going to come out and tell you there was no rate hike. I mean, we already knew that was happening. And the thing is, we want to see kind of what he talks about 2024. And any question leading to 2024, is there rate hike? What's happening? This is the trade I see on the table right now. This is the scalp trade that I see right now beginning to form for BTC. All right? I know I got a lot of lines here, and it's insane. But once we get above this point of control, we're going to go through that gap to the value area highs. And you can see we can easily get back up to the zone. Let me bring this in where you can see this level. You're going to see this gap here. And the next place to take profit right there at 34,787. So I'm already long. I'm going to see what happens here. And but that looks like we're about to make a move further to the upside. Let's take a look at Bookmap as well, as we have about 9 more minutes till we get in here. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome to the Crypto Lifer Show and the coverage of Jerpa. Anyway, we're going to break it down for you like we did earlier today. Look at this, the longs that got, the shorts that got squeezed. People that thought they had a beautiful short going their way got absolutely demolished. They had the whole market freaking out for whatever reason. Not a good idea, you know what I mean? Don't get emotional. Use the chats. It's all in the chats, baby. It's all in the chats. It's in the chats. It's in the chats. In Boston, charts and chats sound the same, right? Anyway, yeah. 34,550. I kept telling you how important it was that we got back above 34,250. If we couldn't get above that area, we were going to be in some serious trouble. I'll tell you right now. That was, for some reason, the 34,250 area is my go-to. Like either we get above it, we can go to 38,000, 40,000. If we couldn't get above it, we were in trouble, folks. We were in trouble. All right. Shout out to all my beautiful souls. 256 people on the live stream. Unbelievable. You people are unreal. Best people in the game. I have the best community in the whole entire world. I really do. I know I do. You know when you build something that's just strong. God bless you. XRP charts, look at for us, please. So what do I see happening? I see more of a short squeeze coming. Look at the gap here. Bitcoin about to pump all the way to 34,781. That's what I see happening right now as we speak. All right. And there we go. I talked about tether dominance having to break down beneath this 200 SMA. We did not want to see it. We want to see this dump to the downside. I made a tweet about it. We got what we wanted. This helped Bitcoin get ourselves back up to the upside. Making sure that we did not get back above the 200 SMA on the 1 hour time frame for tether dominance was an important piece of the story. I could piece all this together for you and show you what assets to look at, when to look at them, and how to look at them to teach yourself to bang on them to the upside. Shout out to all my peoples in the game. Yeah. Sold to $250. Thing is, there's people that... Anyway, nothing. I'll say nothing. I'll say nothing at all. Shout out to Juice World in the house. God bless you, man. Thank you for being here. Shout out to Jebbatron. Shout out to Irish Aries, Matt Stevens. Shout out to Tommy G. Shout out to Michael Miller and all the beautiful souls here on the live. Appreciate you all for being here, sharing your most precious asset with me, and that is your time. Let me get this ready. We don't need news from yesterday. We don't need the news. Crypto bubbles in the last hour. Solana continuing to melt faces, render melting faces, injective link. All the hotties just doing damage. Uniswap continuing to bang on them. Not a lot of gains in the last hour to 2 hours in crypto, baby. And we're about to get it in here, 224. And we already gave you a trade live on the channel. I already gave you a live trade, stop loss, entry, and take profit. It's right there, ready to go. The fact that we got the golden cross is likely. The tight moving averages, all of this moving up. Highly likely we're going to get the move to the upside, but anything is possible. Bit of a W here, too. Look at that. It's a beautiful W to the upside, baby. To the upside. W to the upside. 7 minute, a little spent. 15 minute, getting a little high. We're going to see if this 1 minute can cascade us up a little more to the upside. If you're just looking at Bitcoin, you got 5 more minutes to kind of keep you clean. Let's take a look at Bitcoin nice and clean here on the KuCoin chart. We'll delete all our moving averages, and I'm just going to show you what I see happening. I mean, we got the V-shaped recovery right back to the upside there. Bang. And you knew today was going to be crazy. I wouldn't be surprised if we made it back to 35.2 by the end of the day. All right. So right off the bat, I mean, we're still looking absolutely beautiful inside a bull pennant. The thing is, this shape breaks out 68% of the time. Everyone's trying to figure out liquidity, what people are doing, if this many short, if this many long. You don't have to do that. Like, this shape will break out 67 out of 10 times. Like, it's so, isn't that simple? Like, I don't get it. I guess you know what it is? People are afraid to trade this shape. I've traded it 1,000 times. So I've been right 700 out of 1,000 times, right? So I'm so comfortable that this thing's going to pay me because it pays me more way than it doesn't. So even that alone, you don't even need an indicator. You could just literally long this off the basis that it's 68% of the time you're going to get paid on this exact, you know. Again, I add other things to the idea, and I'm waiting on the 8 hour time frame. That's my go-to right now for a massive move to the upside. And you want to look at the moving averages. Today was so important that the 1 hour did not, like, that got everyone freaked out right there. And I said, I'm going to wait, but we have to close that candle back above the 200 SMA. If this 1 hour did not close back above this yellow line, we were going down. And we were going down hard. I just want to make that really, really clear. All right. And look, this trade's already breaking out. You're already in the muddy on this trade because the entry was 34,528 and it's already at 575. You're already in the muddy. You're already in the money. You can move stop loss to break even and find out what happens from now. This thing is, you know, and again, I'm not a financial advisor. Nothing I say you should be taken as financial advice, but that's a winning trade right now. Right now, that's a winning trade, period. Done. Done. All right? I show up and give you a trade like this. When I touch the charts, I can show you how to make money immediately. Money falls out of my hands, man. Money follows me. People that hang out with me get rich just hanging out. And you think I'm joking? I'm not. It's an Aries way, man. The Aries, when you meet an Aries, we like to help other people get gains. Like, I'm not happy unless you're getting gains. I'm not happy unless I make other people millionaires. Like, I'm not a successful millionaire until I help you become a successful millionaire. Like, that's just how I truly believe, you know? And again, if I can't do it for you, or I can't figure out how to help you get to the next level, then I'm not good enough. I'm just not good enough. Look at that chart. Look at that banger. I just gave you the trade, and I can't pump Bitcoin. You know that. Me and my trading group can't pump the price of Bitcoin. Its TA is that stone. So, and everyone else is going over the Fed meeting. Did they give you a live trade the second they showed up to the stream? I gave you a live trade immediately. No BS. You know what I mean? Why go anywhere else if you're not getting a live trade immediately in the first 5 minutes? If your time is getting wasted, if you're not getting paid, I'm going to pay you. If you're going to show up here, I'm going to make sure you get paid. Let's go. You're going to spend your time with me. I'm going to make sure you get paid. Everyone else is playing games out here. This is not a game. This is real, baby. This is real. All right? And I just, I take it more seriously than everybody. This is the real deal. There's no jokes. There's no jokes here. This is the real, we're going all the way to the moon, man. Seriously, I'm not playing around. And you shouldn't be either. Oh, man. As real as it gets, baby. Look at that. Still pumping to the upside. Beautiful trade. I just gave you the trade, man. It's in the money right now. What more can I do? What more can I do? All right? And we just lost the music for some reason. I don't know why. Could be something to do with the VPN. I don't know. But we lost the music. It's all right. We don't play music during the live anyway. It's all right. Rates got paused again. We already knew the rates were going to get paused, dude. Come on, man. Are you serious? You're joking around, right? Dude, we have a CME watch tool. It tells us you days before what's going to happen. There was a 99% chance. There was no way the rates weren't going to go. We knew this, my man. Everybody knew this. The whole world knew this, bro. I love you. Let's take a look at what's happening. He's about to come on in one more minute. Powell is going to break it down. Yeah. Did you buy up any dot? Nah. Polkadot, I think there's better out there than Polkadot. It is what it is, but, you do you. I do me's. So, look, now that we hit, I would take profit. See, I would scalp. From low stochastics to top stochastics, I would scalp. Now, if I wanted to stay in the trade, I would make a flag. If the flag continues, it's going to hit the 21-day moving average and continue to the upside. It might even make a sideways flag. We don't know exactly how the flag is going to play out. We just know we want price action to interact with the 21, the white line, and then it's going to continue to the upside. My target waiting, stop loss already brought into break even. It's a risk-free trade that I just gave you immediately. I was on the channel for 2 seconds. All right? I showed up for a second. We made it happen. Bang, bang, bang. And all you have to do is be able to see the patterns and know where the moving averages are. Understand support or resistance and stochastics RSI, and you have yourselves a winning combination, my friends, all the way to the upside. Let's take a look. Powell is coming on. Let's get it going. He's usually late. That's some good background sound, though. More short squeezes coming for Bitcoin.
Everybody, I'm Joe from the Board's Public Affairs Office. We'll get started in about 5 minutes. We'll get started in about 5 minutes. When the chair comes out, we'll make a brief opening statement and then take questions. If you have a question, please raise your hand.
Right now, I have the 1 minute, the 30-second chart up. That's the one that we're going to be playing on most of the time. I tell you where the moving averages, and we're going to be drawing all sorts of fun stuff here. All right. What I do is I duplicate it. I make it big on another screen so I can actually manipulate it on a large screen, and then whatever I do on the large screen will play out on the smaller screen. It's pretty cool, right? They're going to wait 5 more minutes till Jerome Powell comes on. Gives me a second here to get it in. 20 or 40K? Are you serious? Are you really saying stuff like that? Yo, they got the masses so bugged out. If you don't realize we're going to 40K right now, you're out of your mind. If you really think we're going down to 20K, I think someone's got you, brainwashed. What, baby? Let me see. Where'd you get a boo? No. Is it okay now? Let me have a hug. Oh, my boo. Little cutie. Huh? Not right now, baby. I got a show to do, baby. All right? Hit refresh. JP already talking. You have a delay. Thank you. Thank you.
Rates. Higher interest rates also appear to be weighing on business fixed investment.
Doesn't matter. We're winning the trade. That's all that really matters.
Tight,
trade is banging to the upside that I just put on for you.
To come into better balance.
Bang.
Over the past 3 months, payroll job gains averaged 266,000 jobs.
Not right now, please, babe, please.
A strong pace that is nevertheless below
I can't do this, my love.
earlier in the year. The unemployment rate remains low at 3.8%.
She can't stop the kid.
Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year. particularly for individuals aged 25
Still pumping to the
54
upside.
years. And immigration has rebounded to
Dude,
pre-pandemic
that trade
levels.
is banging on them. No stop loss got
Nominal
hit.
wage growth has shown some signs of easing.
I
and
gave you a
job
trade the
vacancies have
second this
declined
thing
so far
started.
this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%.
You're never going to get to 2%. You're so
Total
full of
PCE
garbage, it's
prices
ridiculous.
rose
You're a liar.
3.4% over the 12 months ending
Liar.
in September.
Or just
Excluding the
incompetent.
volatile food and
I
energy
told you we were going
categories,
to the
core
upside. Look at this
PCE
beautiful
prices
trade.
rose
I gave you this
3.7%.
trade the second I showed up with a stop loss and
Inflation has
everything.
moderated since the
The
middle of
entire
last
trading
year,
group should
and
be in the
readings
money
over
right
the
now,
summer were
seriously.
quite favorable.
If you're not of the money, I don't know what's
But
going
a few
on.
months of good data are
You're not
only the
getting the-
beginning
you're not
of what
listening.
it will take to build
You're not
confidence
learning.
that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range
Well-anchored.
of surveys of
So
households, businesses, and forecasters, as well as measures from financial markets.
Look at that massive move.
The
Boom,
Fed's
dude.
monetary policy actions are guided by our mandate
I called
to
this for
promote
you the
maximum
second I
employment
showed
and
up.
stable prices for the
Unbelievable.
American people.
You can't say a word about
My
it.
colleagues and I are acutely aware
Look at
that
the
high
massive
inflation
short squeeze
imposes
right now.
significant hardship
Let's go.
as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion.
Wow.
Our restrictive stance of monetary policy is
We
putting
bought up all
downward
those
pressure
prices.
on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently
subdued.
restrictive to bring inflation sustainably down to 2% over
Why?
time.
Why? You're
and
not
to
making any
keeping
sense.
policy restrictive until we are confident that inflation is on a path to that objective.
Yes, look at this massive
We are
short
attentive
squeeze.
to recent data showing the resilience of economic growth and demand for labor.
I would take profits here.
Evidence of growth persistently
At one
above
point, we're
potential,
going to flag again.
or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond
wanna
yields,
move that.
among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and
Still
for
mooning. Look at
economic
this thing. It's
activity
not
and
stopping. It
inflation,
wants my target.
as well as the balance of risks.
What's my target?
In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative
Does he hear
tightening of
himself, or is he
monetary
just
policy,
absolutely dull?
the lags with which monetary policy affects
This man's
economic
IQ must be
activity,
smaller than a
inflation,
turtle's.
and
Straight up.
economic and financial developments.
Like he's like, what's wrong with this guy?
We remain committed to bringing inflation back
Look
down
at the
to our 2%
massive short
goal
squeeze here.
and to keeping longer-term
Bang, bang,
inflation
bang.
expectations well anchored.
Woo!
Reducing inflation is likely to
Woo!
require a period of below potential growth
Let's go, baby.
and some
Let's
softening of
go.
labor market conditions.
Let's go.
Restoring price stability is essential to set the stage.
Massive
for
short
achieving
squeeze here
maximum
on Book
employment
Mount.
and stable prices over the
Getting
longer run.
absolutely obliterated. The people that don't know how to
To
trade.
conclude, we
They don't know how to
understand
look at
that
a
our actions
simple
affect
ascending triangle.
communities, families, and businesses
And low
across the
stochastics.
country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
He's just reading off a
Thank you,
teleprompter,
and I
obviously.
look forward to your questions.
Colby Smith and the whole bang, right? The whole group, right?
Howard
Oh,
Schneider with
dang.
Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So I'll talk about bond yields, but
If you're just coming into the live, I give you a live trade the second I showed up. Stop loss, break even, and target. We got about 70% to the target. We're so close to the target. Look at that.
Inflation has been coming down.
Insane move.
But it's still running well above our 2% target.
Now they're going to go the other way.
The labor market has
liquidate
been
liquidate the
rebalancing,
longs.
but it's still very tight.
Anyone
by
who got
many
late on the
measures.
move. If you don't know how to move your
GDP
stop
growth
loss
has
or
been
take profit, you're going to get
strong, although
smashed.
Many forecasters
Look at that.
are forecasting, and they have been forecasting that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such
You're
a stance.
never gonna get
So that
there,
is the
you
broader
clown.
context into which this.
Sorry, I mean,
the
God
strong
bless
economy
everybody
and
in
all
the
things
world,
I
but
said,
come on,
that's
man.
the context in which we're looking at this
People are
question
like absolutely dull.
of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer term rates that have moved up, they can't simply be a reflection of expected policy moves from us that we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic
Kind of a shoulder
activity
ahead and a little
to the
right
extent
shoulder
this
there.
tightening persists, and the mind's eye goes to the 8%, near 8% mortgage rate, which
30-second
could have a
chart.
pretty significant effect on housing.
Now we have
So
resistance
that's
at
how I would answer.
34,616.
Just as a quick follow-on to be clear on this, in your opening statement and just now.
Gotta break above that
you-
level.
You seem to imply that you are not yet
POC.
confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination.
Shoulder, head,
and
shoulder.
we're
See it
not-
starting
I
to
will
drop
say
to
that
the
we're
downside?
not confident
Look
at this
at that
time that
thing.
we've reached such a stance. We're not confident that
That's
we
another
haven't.
head and shoulder
We're
pattern.
not
That's a short
confident
right
that
there,
we
see?
have. And that is the way we're going to be going into these future meetings is to be, just determining the extent of any
All the way back to
additional further
34,550 again.
policy,
Volatility
tightening
today is
that may be
insane.
appropriate to return inflation to 2% over time.
Never going to get to 2% over time. So ridiculous.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity. And so we'll be taking, and also the broader
Head and shoulder
situation,
breaking
the broader
down.
financial conditions situation, and the broader world situation. We'll be looking at all those things as we
shoulder
make a
to the
decision
downside. Look at that.
in December. We haven't made that
Boom.
decision.
Hit the target.
I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
They don't want to say a nothing. A nothing. They don't want to say a nothing. A nothing over here.
Nick Timmeros of the Wall Street Journal.
Nick, man.
Chair Powell, did
Chair
the
Powell.
Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much
We might just go right
does
back
this
up again.
tightening
See
in
this?
financial
That holds,
conditions
we'll go right back
substitute
up.
for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point. when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, I guess what makes you
I can't tell you a damn thing.
What makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Oh, hit him with the heart.
The way our policy works is, and sometimes it works with lags, of course, which can be long and variable, but ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see, if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Colby Smith.
Thank you. Colby Smith with the Financial Times.
We know them all.
In terms of the thresholds that you've laid out,
I got a photographic memory.
what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth, we look at growth insofar as it has implications for our two mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
I'm not going to tell you a dang thing. He's not going to say a word. You're not going to know. He doesn't know.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee, but then you just said that we haven't made a determination. Would you say the bias right now is neutral? That there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for, I'm sorry, 1 additional hike?
I think you're talking about 1 additional.
Yeah,
I wouldn't say that at all. I would say, I mean, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking.
Wow, all the way down to 490 again.
It's not,
absolute insane.
That is the question, and you're right. That
the volatility
in September,
is so
we wrote
insane.
down 1 additional rate hike, but we'll write down another forecast, as you know, in December.
Chris.
Thank you, Chris Rugaber at Associated Press. Since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there, as you point out.
They're not bouncing
global,
back to the
geopolitical tensions.
to the person
are
asking the
certainly
question
elevated. Here. And that goes for the war in Ukraine. It goes for the war between Israel
Zooming
and Hamas.
in here, I see a nice bullish divvy on the
We're
1 minute
monitoring
time
that.
frame.
Our job is to monitor those things for their
Right here, look.
economic implications. So the UAW strike, as you point out, is appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of
What's this
of
bullish
risk
div? I
out
see a
there.
bounce coming right now, all the way back
But
up to the top
I would go
of the
back
pattern.
to the bigger picture from our standpoint is.
I see Bitcoin about to
got
bounce
a very
right
strong
now.
economy, strong labor market.
Boom.
Making progress on the labor market.
Bounce
making
coming for
progress on
Bitcoin. I'm calling it
inflation.
right now. Watch this.
And,
we're about to explode
we're
back to the
very
upside and
focused
short
on
squeeze. Watch it now happening. I'm going to
getting
call the short squeeze
confident
again. Watch
that we
this.
have
Here it
achieved a
goes.
stance of monetary policy.
The man,
with
the myth,
sufficient
the legend. Here it
That's
goes.
really our focus.
Great.
Make
And
it
just one
happen.
quick thing. You last month had gone to York, Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a
Inverted head and
town with
shoulder.
a real strategy, and I would say it's very impressive what the people there have put together.
About to make a right shoulder go
in
further to the
face of,
upside.
some
That's
difficult
what I'm looking at
longer-run
here.
trends about
Continuation on the
offshoring
trade.
of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Damage. Geez. There's no end in
Hi, Chair
damage.
Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. You know, we've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side, gain that is really helping the economy, and it's part of why GDP is so high, is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left. We think, and I think, we'll still be left with some ground to cover to get back to full price stability. And that's where monetary policy and
there might be an age in Dimash. I'll give you that to you.
Demand is still going to be important.
I never said no age.
I'm curious against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year.
See, I'm looking for this right shoulder head right shoulder to start breaking to the upside right now.
Basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out, but it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to get a clear answer and say, I'm just going to assume this, is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification.
Look, I told you this right shoulder was going to break up. It did it right in front of your face. Look at that shoulder, head, right shoulder.
You need slower
There's your measured
growth.
move.
You had always said before.
I got price action and wrapped up in a freaking bow.
Than trend
I got it wrapped up in a freaking bow over here. I can show you exactly what's happening.
To me, like you're basically saying here that the dot plots out the window.
Absolutely insane. I saw that right shoulder before it happened.
Live with the possibility
Second
of a
trade you
rate
could have
increase
taken.
for right now. Doesn't matter about the turn of the year.
Sure, the
And
falling
that
wedge
there's
was going to
not
break to the
an
upside.
Objective way.
I pointed
to
out the divergence
determine
right there, the bullish divvy.
whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy.
That hit the measured
in light
move right
of their
now.
own
Look at that.
personal economic forecast.
The charts play out
In
every
principle,
single time.
when things change.
Isn't that right, my friend?
That's
Isn't
not
that right, my
plan
friend?
Anybody's agreed to. Or
Isn't that
would do.
right?
That's a forecast that would change, for example. I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there.
More shorts about to get
We
squeezed.
do personally update our forecast, but we don't formally update the dot plot. So, you know, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out
Show you
there
the shoulder.
our
First, we
thinking,
gave you a
and,
live trade when it came
as
out.
we
Let me
approach
show
the
you the
meeting,
shoulder, head,
we'll
shoulder,
all
done.
be, my colleagues and
Inverted
I will
bump.
be talking about how we're
Blump, blump.
processing that data. In terms of, we're not really changing the way, in terms of growth.
I'm trying to get you paid.
What I said was below
I'm trying to get you
potential.
paid. You don't
So
care how much
what
money
you
I got.
have
If I keep
here
showing you my live
recently
trades, what does
is
it matter? I'm trying to
growth
get
that
you
is- that
paid.
is,
You're the one that needs to get
temporarily,
paid, not
potential
me. I
growth
don't want you
is
watching my money. I want you watching
for
your money.
a year or two right now.
Shout out to everybody here on the
over its
live. Thank you for
trend
jumping on in.
level. So the right way to think
Bang
about
it on
is
them to the
what's potential
upside.
growth this year.
Banging on them to the
People
upside.
think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply
See
chain,
what we got
and
going on now.
shortages and those kinds of things, you're seeing actually
Nailed
elevated
that
potential
inverted
growth.
though.
There's catch-up growth that can happen in potential, and that means that if you could be growing at 2% this year, and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about the meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on subjective criteria rather than
You just broke it down
objective
like you're
at each
completely
meeting?
nonsense. Like you just said, you sound like you're
I mean,
talking complete nonsense, bro.
I don't know that I
Like,
want to just accept anybody's characterization of it. I'll tell you how we're doing
Oh,
this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at, and then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think one or two additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also,
stupid.
we're being careful. We're proceeding
After 30 of these
carefully
meetings, I just
because
can't
we
take it
can
anymore. It's
proceed
so
carefully
ridiculous.
at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Neil. Thanks. Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields that we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the
Tight
higher
moving
term
averages
premium
here
was
tells me a
endangering
big move is
dual mandate
coming.
goals, would that be reason to think about slowing or suspending QT?
Here's your next trade.
Or should we think of that as more of a technical question
Let me
around
clean this
reserves?
up. I see it now.
So committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up. And
So a lot
QT
like the
is
1
certainly
minute we
on that
started
list.
on
It
at
may
the
be
beginning
playing
of
a
the stream.
relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Well, the volatility is insane today, though. I'll give you that. It's just nuts.
Hi, Victoria Guido with Politico. I
Guido.
wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different
Basel
aspects of the
III.
proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, until well into next year.
We will
We've
never get
extended the
2%. I'm gonna
deadline.
run on president
and we'll
for-
take them seriously. We'll read them. I'll say
whoever listens
what
to
I
this
do
dude was a
expect
liar,
is
too.
that we will come to we're a consensus-driven organization. We'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It's a bit of a cup and
It
handle
means
there.
broad support.
I see a big move coming for Bitcoin, about to blast all the way to 34,793. It's about to happen. I see a move for
And I'm
Bitcoin
Marta
right
with
now,
Bloomberg.
about to explode.
So, In addition to persistence, when you
My
look
stop
at
loss would be
long-term
below the
treasury
previous support of
yields,
resistance,
what else are you
34,560.
watching to evaluate how those tighter financial
Boom.
conditions are hitting the economy, and if it will lessen the need for further
Semi
tightening?
cup and handy.
Also, do you think
After
that
the bounce
those
off the
higher
resistance.
yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but they're a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of
I can
equity
talk in
prices,
circles.
the level of
gotcha.
rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture. And they do play a role, of course, in many of the major standard financial condition indexes. Your second question was?
It's the next trade I'm looking at right there for a move to 34,800
banking stress.
basically.
So it's something we're watching.
Stop
As
loss
you know,
below
we,
this previous
we did
resistance.
have there were issues with
SR
interest
flip.
rate risk, and also
Looks clean to me. Low
funding,
stochastics.
uninsured deposits,
Tight moving averages.
in the March, the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but
Handful, huh? Just a
that's what we're out
handful,
there
just a
doing.
few hands.
And
here's the short squeeze coming for
we don't have any
Bitcoin. I'm
reason to
calling
think
it.
that these
If you're
rate
short,
hikes,
you're probably going to get
are
rocked right
materially
now.
changing that
Sorry
picture,
to
which
say.
is one of a strong banking system and one
Just a
where there's
probability.
a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
So you're right. We put a proposal out for comment is what we did. And this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
There it goes, starting to move.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over
Right
the
to the
last
zone right here, right here.
3
That
months, the
big bar of
year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
The progress
mouth all the questions for you
probably
guys.
going to come in lumps and be bumpy.
I
but
just called
we're
this
making
squeeze. I
progress.
just
Yeah,
called you
think-
this
I think
breakout
the
for you.
Core PCE came
Similar
down
to
by
what we
almost
just saw
60
before.
basis
Look at that
points
booming.
in the third
There's the
quarter.
short squeeze. I called it before it happened.
The
Here it
best
goes
thing I
again.
can point to too
Telling
would
you
be
where price
the,
action is going before it
September
happens.
S&P where the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year
Shabby,
after
come on,
that
Hattie.
further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing
Might be
too
a retest
much
now there.
could be
Watch out if
easily
we lose
fixed.
it.
How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks are, have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the Bank Term Funding Program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. It's November 1.
Anytime I ask him a serious question, he's like, we don't really need to do that yet.
Sorry, quick separate question about inflation expectations.
I actually don't have to answer your question.
Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2%.
No, we do not. No, we do not.
And it will.
Who said that? Who told you we believe that? None of us believe that. You're out of your mind if you think we believe that. You're crazy.
Reading that is
you're crazy. You're a psycho. You're a psycho.
Honestly, the bulk of them are just.
You're either a psycho or a liar, man.
That the public believes that inflation will come down, and that's, of course, we believe that's critical.
Believe, think, things you should never say when you're trading, right? And they're dealing with data. Believe, think.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah.
They back him into his own questions.
First thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it.
It's an important metric that we can't figure out. That's what he just said. It's a super important, but we can't really base it. Like we can't figure it out though.
Grain of salt.
So we take it with a grain of salt.
What we know now is, within a range of estimates of the neutral rate policy is restrictive. And it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to
strange duck.
To sort of agree as a group on whether our star has moved or not. Some people think it has. Some people haven't.
Nobody cares.
Don't think it has. Ultimately, it's unknowable, and so
they care about
really,
their
again,
trades.
what we're focused on is, looking at the data and giving ourselves
Nobody
a little
cares
more
about
time
your
now
money.
to look carefully at the
Nobody
data.
cares
by
about your
being
money.
Careful in our moves.
Nobody.
Does it feel like
remember that
monetary policy is restrictive
Nobody cares
enough
about your money
to bring inflation
remember
down
that.
to
If they
2%
do, you don't
over
want
time?
them to care about
That's
it.
the question we're asking ourselves.
Dumpage right here. No love.
Years from now, economists will be revising their estimates of R star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects of that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration?
So if you look at the broad range of wages, they have wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given
idiosyncratic.
reading. So that's what you see. And so what you saw with the ECI reading was, if you look back a couple, it comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally, too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time too.
To me, it looks more like an M that wants to break down.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
What a good question. Do you give a damn,
as I mentioned,
about anyone else
I think
but yourself?
for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having higher inflation expectations become entrenched. So that was the concern.
What a clown.
I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down.
He's actually good at his job because this is what he's supposed to do,
We're still
right?
trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that. They're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance because policy is clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are.
Volatility has slowed
down.
down. They've ripped everyone they could all day
long. What are you
long.
looking at to be sure you're not overshooting?
Best TA
Well,
for
I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So, what are we seeing? Are we seeing is inflation still coming down? So that's the first thing. Second thing is in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down as we discussed, but coming down, in a kind of gradual way.
She's still talking.
I think that's we want to see that whole set of processes continue.
It's like, come on, man. Are you done speaking gibberish? Like, we're real people with
Right,
high
no,
IQ,
CNN.
man. We know when someone's BSing us.
Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if
It's a nice higher low,
there's
low,
been,
higher
been
low
any
right
structural change in consumption?
It's even a hidden bullish divergence here on the smaller time frame. See, swings
I
down,
wouldn't
while that
say
swings
there's been
up.
a
Tells you you're
structural
going to
change
move
in
out.
consumption. I would say it's certainly been strong, and so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that
when people try, they don't do too good.
That households have from
when people
the
get it done, they
pandemic
get it
when
done.
Couldn't.
I removed try from my from the English language. It's the worst word in the world.
And there can still be more of that than we think. Although at a certain point,
nobody cares about your money. Nobody.
Pre-pandemic levels of savings. We may
I
not
just
be
like
there
saying
yet.
that.
So things are for clearly.
But it's
people
just
are
true.
still
When you get
spending.
rich, believe me, no one's going to care about your money.
The dynamic has been
nobody
really strong job creation, with now wages that are higher than inflation, in the aggregate anyway, and that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had a really that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led
Government
to
cares so they know
more
how much they can
growth,
steal
more
from you.
spending,
Money.
and that kind of thing. And it's been it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of
See us breaking out of this little pop here
at this time, which is the unwinding of the pandemic effects. That's what makes this cycle.
I see a tightness coming
unique,
up.
I think.
A symmetrical triangle
We're
is going to
still
go either
learning.
way. It's a 50-50 shot when this fills out.
That took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
We can still blame everything on the pandemic because we didn't know, and now we still don't know.
Thank you, Chair Powell.
So I'm just going to say I don't know.
Agence France Presse.
And walk away.
Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said the Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say so. Really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about? The price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to understand the economy and the economic effects, and it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to take great, really important notice of, but it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. War in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Thank you.
Thanks very much.
That's it. It's a wrap. Peace out. We don't have to listen to him ever again. No, probably not. There will be a day we will never have to listen to him again. I mean, isn't that awesome? To think that it won't be forever, man. It won't be forever. Let me just give you my last update here for Bitcoin, and then I got to jump on out of here for the day and break it down. So let's do what I do every day. I just can't seem to do it any other way. So let's talk about the weekly. I just always have to go from big to small. I don't know why. It's like an obsessive thing for me now. I can't really do it any other way. Really weird. It's like I have an OCD or something. Maybe. I mean, look at a guy who shows up every single day for 1,000 days. Has to have some type of obsessive compulsiveness. Type A personality is what my dentist called me. I guess. He said, you sound like a type A. My gosh. Thank goodness. Pamp it up. Yeah, and then we lost the music, man. For whatever reason, we lost the music server. It's back on, though. It's back on. It's back on. No Eat, No Pay, right? Why not? My favorite track in the game. No Eat, No Pay. Woo! Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. No, but I mean, we can see our previous two resistances that the weekly has above us. We know that, are we coming back down? All right, and we go over this till I'm blue in the face, yada, yada, yada. And we'll form our flag on the 22 or the 12. I live stream. Yesterday I live streamed for 5 hours, basically. Sin City Crypto, Bookmap, and then did the monthly candle close. You got to do what you got to do. I don't care how tired you are. You got to get it done. People want what they want. People want the candle close, baby. Every single month. Get it done. Just get it done. That's what they want, baby. That's what they want. Give the people what they want. Amen. So now we're looking here at the 4-hour time frame. This thing definitely got a nice pump back to the upside. Stochastics are low and ready to rock. We have an inverted head and shoulder on the Stochastics RSI. I'm still long with the stop loss below the wick, and I've been in it for so long, baby. And this trade has just been like draining me, but I did want it to take its time. Let's bring on the moving averages and talk about it and break it down. We were waiting for price action to touch. I wouldn't mind if we went even more sideways, and this 200 came up to price. And we went another 3 or 4 days sideways. It took from the 24th, though, it took about 7 or 8 days for this to kind of play out the way it did. All right. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. We love you. Respect. No more hikes, period. I mean, it's looking like they won't be able to hike. They're so lost in the sauce. It's ridiculous. They should stop doing things because they don't even know what they did already, so they should just stop doing anything. Because they're like, oh, we don't know if what we did kind of got here, so we have to wait to see if that happened, but we're not sure. But yes, we had to make a decision based on the idea of things we don't know. And everyone's like, what? Are you talking to me? What are you saying? All right. And so now we're looking at the 1-hour time frame, in a 4-hour time frame, and the 22-hour time frame, all oversold. To me, that's a win. The 1 hour stayed above the 200 SMA. Everything is good. And we got some awesome volatility, scalps out of it as well. So super exciting, super awesome, and everything looking pretty nice. So I'm still, basically I'm just watching Bitcoin go sideways. Probably tomorrow morning we show up. Bitcoin is still sideways. And when I do my update tonight for the trading group, I see Bitcoin pretty much sideways, getting ready for its bigger move as it gets tighter and tighter in the zone. And they just flush out the shorts and the longs on the way. And that's kind of what I'm going to look at. Let's take a look at Sol, which continues to bang on them to the upside. Solana. And I told you out into Solana. I put a fat trade into Solana and just let it sit. Wow, it ripped all the way to 46. Are you kidding me? Eventually got the sell-off on a blow-off top. I mean, that is a blow-off top. And let me take a look at my Sol position. It must have made like $2,000, right? Funny, I bought it when I was on vacation, and I bought it like right after I got out of that jacuzzi. I was like, you know what? I like Sol right now. Sol, baby, Sol. And it was just, it was getting talked about. Yeah, look at that. A gain of $2,200 so fast if I were to sell that P&L there on Solana. Unbelievable move to the upside, Solana. It's fun making a couple grand a day. Hey, yeah, it took a little longer than that, right? Also, we put our money into this coin, and it banged to the upside. TIA, which is Celestia, one of the new coins out here that you may never heard about. But we told you about it, right? And I got in on the live stream at 220, 219. This thing would blaze all the way to 267. Still holding gains of 251. All right. When are you going to sell Sol faster and cheaper than ETH? Facts. Oh, it's so easy and quick to use, too. I've never been a huge fan. I'm not going to say I'm like jumping on the Sol bandwagon. But I believe it's definitely a great speculative investment to jump in on. We loved Render. We talked about Render. The elite trader JD brought up Render multiple times. All of us did as well. I brought it up multiple times. I brought it up at meetings. I show it when I'm going over stuff. Let's take a look at what happened to Render here. So I saw Render in this giant, broadening rising wedge, and then I see it coming down to the bottom with a rip to the upside, and Render absolutely took a nice Ripley to the upside. If you look at the 6 hour, Render's just getting started with its next leg up, right? Look at that. Just getting started for its next leg to the upside. Render about to explode in the 6 hour time frame. Looks like it's going to $3.43 sometime soon. I like what I'm seeing here on the 6 hour. That is by the breakout. I never really do that. I would wait for a flag in a smaller time frame, but that thing looks like it can moon. And the way those stochastics are just getting started and the way you have hidden bullish divergence tells you that the trend will continue to the upside. I'm telling you right now, that looks absolutely amazing. You zoom into the 1 minute, 5 minute, you look for a flag like so. You take this flag and then you ride that 8 hour further to the upside. I mean, this looks absolutely amazing. Wait for the 1 minute to reset. Jump on in. Render looks amazing. I like Render. Thing looks like it could do some damage for sure. And it could be a great long-term hold as well. So it's a win-win really. But I see it continuing. Good AI coin. A lot of people want to get into it. Continuing to pump to the upside. Rendered, baby, rendered. All right. And again, I'm not a financial advisor. Nothing I say I do should be taken as financial advice. Please get yourself a financial advisor and do your own due diligence before getting into any project, coin, or trade. But I see Render going up on the 6 hour, 8 hour time frame. They're my go-to time frames that I keep talking about. 6 hour, the 8 hour. And they just look prime for a move. The 6 hour specifically looks like it is ready for a massive pump to the upside. Look at that thing. It's pumping as we speak. I think it just pumped up a little more as I talked about it. Render, baby. And I would be selling Render one take profit at 289. The second take profit I'd be selling at 342. But that thing looks like it can moon. And I'm telling you, hidden bullish divergence says we're at least going to break this high and find out where we go from there. I'm riding these stokes till they get to the upside, and then I'm personally in this trade. Bang, bang, bang. Let's take a look at XRP. Someone calling out XRP moving. Let's take a look at XRP. Find out what's happening. Wow, XRP is moving to the upside out of this little flag here. Very similar to, look, if we go back in time, look how Render and XRP look exactly the same right here. Look. 6 hours turning. Look at this. I'm going to do Render and then Radium. I mean, Radium just, wow. All the way to 32. It's been a fun time to trade, everyone. It's been awesome. It's been great times. Super exciting. Well, look, if you look at Render here, and I always show you kind of all sorts of stuff that's connected to itself. On this corny song, and I know that it's not what I listen to, but they play it anyway because they think I like pop, but I know and I want house music. Anyway, so look, see how Render looks in the 6 hour? A flag near the 21, curving with the Stokes, everything looking lovely. Look, that's how XRP looked before it took off right here. 6 hour curving, everything looking lovely. And then you press play, and this thing was gone, baby, gone with the win. XRP on the 6 hour to the upside. Bang, baby, bang. And now, look, it's in a flag here on the 4 hour. Just getting started. So I don't know if they got news or it just, Gary G just doesn't have it anymore. But this looks like it's going further to the upside. A 6666 is the target for XRP on the way to the upside. For XP, get your ZERPs today. XRPZ. Bitcoin back to 34,650. Getting a beautiful pump. Almost back to 34,700. Absolutely lovely. Can't complain. What a beautiful day it is to be alive. Things just going in our way. And that's why I don't take days off. That's why I want to be on the stream every single moment I can. As many hours as I can live. I'm taking it. ADA looking great. The ZERPs, baby. The ZERPs. Yeah, and we got a bunch of setups in the trading group that are looking beautiful. Good old boring quant, please. D-Shuffle in the house. I'm sorry, D-Shuffle. We can't go over quant. It's too boring. Gonna have to put in another coin. Nah, I'm just joking. We'll go over it. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome, 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 welcome. Fake news again for Crow. What's going on with Crow? Can you look at Kate? Casper has yet to make the move. What do you mean? It pumped back up, though. I don't know about yet to make the move. I mean, the move's going to be way bigger. You're not going to get that move for a while. But that pump back off the bottom of the channel, that is lovely. That tells you that it's deciding to stay inside. And look, the shoulder, shoulder, head, shoulder, shoulder. This is an inverted head. That's a complex inverted head and shoulder that very well could break to the upside, the length of the base of the pole to the head. And you can see this thing absolutely moon. I could see it taking a big move. Bitcoin back to 34.6. Wow, another massive short squeeze just occurred. I ripped it all the way right back up to 34.850, only to bring it right back down. Wow, this has been insane. I got 716. I didn't get 850 on Binance. But I am going to show you something interesting right now that I see for Bitcoin. Right off the bat. See, my mind sees it. Do you see it? Watch this. Delete all my old work again. It's like, I got to do it again and again. But that's fine. I'm seeing this, baby. You know what I mean? And that's about to moon. So look for that to get tight inside the zone. That's a bull pennant. Boom. 35,000 for BTC, and we're back on track. You know, the original move today to me was the move. They just played games with everyone not to let them win, but this is what I see happening, and I stay, just calm and collective for BTC here. But this is my next trade for Bitcoin, and I can see it clear as day. I'm just going to watch this consolidation with an alert here. Make sure it kind of plays ball, does what it's supposed to do, but this looks nice. I like what I'm seeing here for BTC. $3.37. Measured move takes you to about 35.70. All right. That's my next idea right now for BTC. All right. And you can see if you just keep going at shapes over and over and over again with the right indications, you can nail it. Oh. Some news coming out for Ripple here. XRP settlement by November 9th looming amid Judge Torres' ultimatum. The world of cryptocurrency few legal battles have been as closely watched as the ongoing tussle between Ripple and the U.S. Securities and Exchange Commission. Now it appears that a resolution may be on the horizon, with the court setting a crucial date in early November. This development comes in the wake of an ultimatum set by Judge Analisa Torres, setting the stage for what could be the conclusion to a saga that began in December of 2020. The last chapter in this legal drama began with a letter from the SEC to Judge Torres on October 19th. In the letter, they requested an extension until November 9th to allow both parties, the regulatory body and Ripple, to come to an agreement on a briefing schedule regarding remedies. Judge Torres responded by granting the requested extension, seemingly agreeing to the SEC's proposal. However, what has captured the attention of the crypto community is Judge Torres' additional ultimatum. In the event that both parties fail to produce a briefing scheduling jointly, she stated the court will take it upon itself to set the schedule. The deadline for this action is November 9th, aligning with the SEC's request. This development has sparked speculation among cryptocurrency enthusiasts who are now eyeing the second week of November as a potential turning point in the long-standing legal dispute. And if it does pump, it's going to go up high, so people are front-running it right now. And that's why XRP is starting to pump in a way. People are going to front-run that idea, all right? They're going to front-run it. This thing's getting ready for its bigger cup and handle. You need bigger cups and bigger handles for bigger pumps, right? So I'd pull out a Fibonacci on this. Wait for that 786-8618 fib, and that thing can continue to rip. I may hold that. That 500 could turn into $50,000. You never know. You never know. All right, everybody, I got to jump on out of here, and I'm going to interview someone from around the blockchain, and we'll be back tonight at 7:30 p.m. with more content. This channel doesn't stop. My team doesn't stop. We love each and every one of you. I care about you all greatly, and I want to see you make great moves with your lives. If I can push you to do something great, that's all I ever wanted to do. That's all I ever cared about. Look for this to possibly touch a 718. It's in the golden pocket right now on the Fibonacci retracement. No guarantees here, but I want to see if this could continue. I like when we're low stochastics, about to get a pump right back to the upside here on the 1 hour time frame. This looks interesting to me. So there's two trades here. You could wait for the bigger trade, and there's even a scalp trade when this falling wedge cup and handle, and that, look, that is a cup and handle too. There's your cup with your handle there. But I could see this break out with low stochastics as well. And you got some hidden bullish technically, because that's kind of down while that swings up. Tells you the trend should continue to the upside. And in the MACD even has, turning points. Falling volume and falling price. Get the move with the Fibonacci on the high volume node right there. And you got to hold it though. And bigger time frames too. I didn't get to take a look at the bigger ones. Like the 7. Is the 7 going to dump? Nah, 7 looks interesting. 15-minute says it's done. It wants to dump in your face. And it already is starting with a bearish engulfer. So that would have to be flipped by the 1, really, technically. That's why I would just watch this pattern with the stop, with the target, the alert here. I wouldn't try to create a scalp trade this, but there's a chance it plays out nicely. I wait for this alert hit. I want to see it get tight inside this channel, and if it does that, there's a highly likelihood it's going to break out. That's my update for Bitcoin and my idea for it, and I'll kind of give you guys what happened. And in about 2 hours from now, this will all play out, and we'll see where we're at and see what happened. Everybody, thank you so much for coming on into the live. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time, hanging out with the lifer. I greatly appreciate each and every one of you for being here. It means the world to me. What an amazing day it is to be alive, man. And look at this. I mean, I see a pump coming low, high, higher, low. The hidden bullish divergence got me going right now. I'm in a long. Everyone, I love you. Thank you so much for coming on into the live. I appreciate you all. I'm out at 80% profits today. It's amazing. But we must watch the smaller time frames. Yep. Quickly, Quant update, my guy. Quant? Hold on, let's see what the super chats. I usually don't take super chats during this time. Kind of like Quant. All right, we'll take a look at Quant for you. D Shuffle. Appreciate you, brother. So last time I saw Quant, I saw it in a descending triangle like it was going to dump. It did that. Target was way lower, but let's take a look here. Quant, remember when we first got into Quant at 87, this thing would rip all the way to like almost 200. Last October, that giant inverted head and shoulder for Quant was, I remember seeing that and playing that. I was in Las Vegas at the time. That's how I'll always remember it. Because when I met Sin City Crypto, I traded the Quant. I traded this inverted. Funny, I remember my life through what I was trading, right? Like I have a photographic memory and pattern recognition, so I can remember my memories based on what I was trading. Like, oh yeah, I met Rob and Sin City Crypto when I was also putting out the inverted head and shoulder on Quant. Look, you can see, because that was back in, end of September, and then we hit our target when I was out there somewhere in the middle of, beginning of October. All right. I want to win. I want to win. I want to win. What if I won right now? Like I saw. Oh. Anyway, Quant looking kind of weird. Major resistance at 162. Nice support that it kind of lost and got back above. It's in a downtrend technically. I mean, you got a low, you have a high, you have a lower low, you have kind of a lower high from the bigger trend. You could say it kind of broke out finally of this wedge. I'm like, is this really quant? Like, it just... Daily needs to reset as well. It'd be cool if it stays above this POC. So drop both of these. If it can stay above the point of control, it's got way better of a move. But look for this flag to flag on out, and whenever it touches the 21-day moving average, it's going to move again when the Stokes reset. Pretty simple to me. And you just don't want to see it go any lower. You want to see it really hold 91. But that would be my next trade. I would watch it go sideways or in a falling wedge, and then I would take it to the measured move somewhere at 133. There will be some resistance, too, at 119. All right. Everyone, thank you so much for being here. I'm out. Made my first Bitcoin trade. Will we hit 34,500 stop loss? I don't know, man. Do whatever makes you happy. God bless you for being here, man. I can't tell you what's going to happen. I'm just going to look at the chats. Have a look at the gas. But Bufflink, let me take a look for you. I don't want to rebuff you. Get it? Bufflink? Rebuff? I don't know. Oh, my gosh. So bad. So bad. Got to bring me back to the 1 minute, even though I don't want to look at it anymore. So they just capitulated us up to the 200 SMA. You see that? They wicked us out of the pattern, wicked us right back inside the pattern. Got it to the 886 retracement and whipped it back up. If we go from here, we almost have a 786 if we take this candle body right there. But that doesn't make sense to me. You could call it an 886 retracement. And honestly, I need a moment. Like, your head becomes mush at one point. Yeah, so you broke out. You broke back inside with the bounce off of the 200 SMA. It's a really good sign. That's why I have this. I just want to see us stay inside the zone. We almost got to 500, but we didn't. There's a chance that holds as your last low, but you never know, man. You know? Only time will tell. All right, everyone. Thank you so much for being here. I'm out of here for the day. God bless each and every one of you. I'll look at Soul one last time for you, buddy, but come on. I'm leaving, man. I've been live streaming all day. I need a break. I also have to do an interview right now in 15 minutes, so I don't have much time to myself at all. At all. And people took profits at that 46 level. It got very, very high. You know, what you want to do is you want to look at the bigger time frames. 12-hour, 22. They're spent. I mean, look at that. It was a blow off top. You're really far away from the 21-day moving average. You're not in like a flag like Bitcoin. So you're likely to retrace at least back to the 21. You know, like this 4-hour wants to come back to the 21. You know what I mean? Learn how to take profits. It's not that hard. You'll be okay. You know what I mean? The only thing about Sol is what if it just continues sideways here and then it goes on another rip and Bitcoin gets the ETF and then things get out of control. There's a chance that like this is like a long-term hold that you don't want to play games with. You know? But only time will tell. Are you willing to long-term hold Sol or do you want to swing trade? You got to make that up for yourself. I see it going sideways or further down. Probably the top of the channel right there. All right. Everyone, I love you. I appreciate you. And I'm out for the moment. I'll be back in the trading group. And I'll see you later on. God bless you all. I appreciate you all. Thank you for a beautiful live stream. And I'll catch you tomorrow. And I'll be in the trading group. God bless.